Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news more settled bond markets are allowing equity investors to jump back in. But first, the global expansion in manufacturing extended into February, but results were very uneven. Germany and the US are recording strong results, while China is slipping back towards a stall. In all cases, however, cost inflation is near decade high. In the US, there were two reports out recording the state of their factory sector, and both report a healthy expansion. The widely watched local one has new orders and new export orders growing, while reporting rising costs and prices. Similarly, the internationally benchmarked market one featured good new order growth, but costs and prices are rising in the fastest in a decade. Those good factory reports are mirrored by American construction levels, up 5.1% year-on-year in January and boosted by a whopping 22% rise for residential construction. In Australia, there's been a very strong rebound in lending for housing, with a massive 10.5% increase in January from December, adding to an even more massive 44% rise from the same month in January 2020. And if you think those record levels are eye-catching, well, the lending growth to investors is even more aggressive, up 52% year-on-year, with almost 11% of that in January alone. This frenzy likely extended into February. Australian home prices surged 2.1% higher in February, the largest month-on-month change in more than 17 years. Meanwhile, the Aussie Central Bank is juicing up their market liquidity, doubling the size of its daily quantitative easing program, mainly because it is failing to keep its target 0.1% yield on 3-year government bonds as benchmark yields rise worldwide. But Chinese factory activity is tailing off after a good start to the year. The private sector Caixin PMI replicated what the official PMI noted yesterday. Their expansion is slowing to a crawl, and this latest data is much lower than what analysts were expecting. The US Treasury 10-year yield is up 4 basis points today to 1.45% and holding most of last week's sharp run-up. And the price of gold starts today unchanged from yesterday at $1,736 an ounce. And oil prices are also little changed, now just under $61.50 a barrel in the US, while the international price is just on $64.50 a barrel. And the Kiwi dollar opens at 72.7 US cents, and nearly half a cent higher than this time yesterday. Against the Australian dollar, we're lower at 93.5 Australian cents, but against the euro, we're firmer at 60.3 euro cents. That means our trade-weighted index is now at 74.3. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.